Hello everyone, this is Paris from Traderstock, and we're gonna do the weekly recap from last Monday, the 21st until the, I'm sorry, I went forward in time. So from the 14th until the 18th of November. Now, we have Thanksgiving next week. It's quite normal for volumes to be quite low as we approach Thanksgiving, and I don't want to disappoint you. I think the volumes, and I have been saying on my daily webinars that as we approach Christmas during the Christmas period, the volumes are going to be dropping even further. Volatility is also going to be dropping. Enough with the words. Let's see how it resembles in the chart on a daily, at least the S&P. So where was the last recap? That was Friday. So we had that was the last candle that we had last week before the recap, and that's the other 5. So Monday, Tuesday, Wednesday, Thursday, and Friday. As you can see, and if you can compare it with all the other daily candles on the previous months, we are stuck in a range. Volume has been dropping quite precipitously, and I really don't think it's going to be picking up anytime soon, unless something fundamentally changed, like maybe something with the war, or with the oil, or a new headline from Powell comes out and he says that we're going to hike to 20%. If none of this happens, then I don't see why we should move aggressively. Now, I have said on my webinars, not the recorded ones, at least on the live ones, that we should be very careful from now on. If there is no volume and no liquidity, big traders are absent from the market because, big traders trade with volume really, and if there is no volume, then they stay away from it. I did say last week there's a good opportunity to trade Nasdaq since since volatility has dropped, and it creates a little bit a few more opportunities than the S&P. Again, S&P, at least during the times that I trade, which is from where I basically trade only the morning session, there has not been too many opportunities really, and the moves are quite slow, and if you don't really make it in 1 or 2 trades, then there are not enough opportunities to make your money back. That is, if you lose money. So there is nothing really to add on the recap. That was the week that you could probably stay away and you would have missed nothing. In terms of figures, and I don't think we have any big figures next week. Actually, we have Thanksgiving on Thursday, which I think, the cash market is going to be closed, so there's no trading on Thursday. And from my experience, trading during the Thanksgiving week, it's a no-brainer. It's most of the people are out, so I'm guessing things are gonna get a little bit more lively in the week after the Thanksgiving. But again, take this with a pinch of salt because I think volatility and volume is gonna be dropping even further. There is no new set of news, so I don't see why trade is going to react. Probably they're going to wait until the next inflation number, which is on mid-December, and that was it, folks. After that inflation number is out, regardless it's going to be higher or lower, people are going to be taking some time off, and volumes are going to be dropping even further. I'm guessing around 1.2 million per day. So basically good volume. That's why I have the line of the daily. It's 2 million per day, and as you can see, we're in a steady downward slope. So there's not really much to say. Let's look at the hourly chart. So it's gonna look even funnier on the hourly chart. So that's the move on the CPI 1.5 weeks ago, and then you have Monday, Tuesday, Wednesday, Thursday, and Friday. All in all, fake breaks, either to the upside or the downside. If you want to take this piece of advice, it's better during low volume periods. It's better if you just find a good level and try to play the false break either to the upside or the downside. It's not directional at the moment. It's going to be directional if something breaks. Let's see at the bonds. The only thing that worth paying attention to is the US 2-year. So that was the upper break level where I have the line. It tried to go a little bit above, but as you can see, it was unable, and it's going back down. Now I guess we're going to be playing for a while now this cat and mouse play. So what I mean by cat and mouse, every time equities are going to be going higher, the 2-year bonds are going to be going lower, and then they're going to be panicking and they're going to say, oh, we have higher rates, and and equities are going to be going down. Then the 10-year is going to be panicking and they're going to be buying bonds, and all this until we have so let me bring you the 10-year as well. So at the bottom we have the 2-year note, and at the top we have the 10-year note. I don't see why the equities should scream higher with the bonds going down. Again, bonds down right now, equities down, because bonds down, higher rates, and nobody likes higher rates anymore. Let's see, right now the play is inflation gonna be, is it the start of a downwards revision in inflation, or is it just a pause and then inflation might pick up again? So people are going to be looking if inflation is going to have a steady downside from now on, and which means that the Fed is going to maybe stop. Who knows? Everybody writes their own stuff. I don't know if they're going to stop. Maybe they're going to stop a little bit at the 5% to do the to see what's going to happen. Like is economy going to slow down with a 5% rate, or is it going to be hitting up? Yeah. So if economy, if they bring the rates up to 5% and economy is still hitting up, then they're going to raise even more, I guess. So we have to take Powell by his word. He has been trustworthy the last, I would say, the last year. He has been doing what he has been saying. So there is nothing to add. Quite boring week. Bitcoin, the only thing was, these FTX headlines, but didn't I tell you that first the cryptocurrencies are going to be crashing, and then we're going to see if we're going to have a recession again? The risk assets have to drop first before, in my opinion. Again, that's an opinion. Yeah, that's not. You shouldn't take this as a rule of thumb. Yeah. So that's just another guy saying his own stuff. Yeah. So I would probably predict if there is a recession, Bitcoin and all cryptocurrencies around zero, and then the real party begins in the equities. So what? You have one Bitcoin, yeah, and you're gonna sell Tesla, your Tesla holdings or your Apple holdings before selling your Bitcoins? No. Euro dollar is again above parity. Let me just show you the DAX. The DAX future, this is the DAX future on a daily basis. We were screaming a recession around here, yeah? 1 month later, just read nothing. Follow the market and you will be okay. So I don't know the way I see it, we are approaching the all-time highs in DAX. Crazy times. Just every time I look at it, again, I'm not surprised by anything anymore in trading. It's funny to watch. They were saying recession. Today I switched on the news, and energy crisis. They have nothing really to say, and then just repeating their old stuff. Energy crisis, we're not going to have any oil, we're not going to have any gas. And now let's see the DAX from 11,800 all the way up to, why am I putting figures like this, all the way up to 15,000, yeah? So good luck reading your news. The DAX is the opposite. Right, so until next week, again, it's going to be another short recap, I'm guessing, for next week, but let's hold our horses until next week. Until next Sunday, have a nice week and a happy Thanksgiving.